Okay guys, welcome back. We're now on Forex Scalping Part 4. Thank you for returning. I really appreciate your loyalty. In today's video we're going to cover, as the title says, candlesticks. I must point out that this isn't going to be a video of me telling you exactly what candlesticks you need to look for to take entries, because at the end of the day, the only way you're going to actually realize that and see that is by you going to the charts, practicing on demo or taking simulation sessions, and over time you'll start to see candlesticks that really work. But the aim of this video is for me to give you a comprehensive toolkit of knowledge which you can use when you're actually approaching candlesticks to see exactly the kind of things to look for, okay? To piece your own strategy together, to take your own entries, and just overall just appreciate a few more little details that you might not have realized that are going to be important for your success in this, okay? So like always, my Instagram is at the bottom of the page. Anyone who's new, be sure to hit me up on there, send me your analysis, ask questions. It's my main point of contact for anyone who's needing assistance. Okay, so let's go on to the first part. So first part is the importance of candlesticks. So in the last video we talked about structure levels, looking at higher highs and higher lows forming, which overall created our bias for the trend. So if we had higher lows forming, overall we were saying, okay, the overall trend is upwards, bullish. So that's great, but then you need a little bit more information of how are you going to actually execute on these zones or structure levels based on your overall bias. So the first point I need to make is, if you wanted to take a trade, you need candles to be forming in the direction that you're wanting to trade. So if you wanted to take a buy, you need to wait for bullish candles, green candles forming to say, okay, the bearish candles are finished, and now we're starting to see some sort of suggestion that we could continue moving back up, okay? Now, we also need to be looking at, are the candles respecting the highs and lows of the previous candles? Because for candles to continue moving up, for example, the candle that's currently moving should not go below the low of the previous candle, okay? So, in this little example at the bottom, let's take a look. So we had these candles here. This was a resistance zone, so a structure level. This candle broke upwards and above, and then it started moving down, bearish candles. Now let's say that for example, our bias on this was upwards. Say we'd done the analysis further down to the left and we said we was in an uptrend and we're only looking for buys. Now you don't want to be taking any entries on these candles because look, these are all bearish red candles. It's only when this one and this one, these two candles have like closed bullish at a previous structure level, is when we can consider looking for buys, okay? So I think this was the 4-hour chart. For our style, we're just going to be using mainly the 1 hour and 30-minute, but this is just an example of okay, so if we're wanting to continue upwards with our overall bias, we need to see that candles are moving in our particular direction, okay? So that's the basics covered. That's just an overview. Now we're going to go into some more details. Okay, so how do we read the wicks of candles? So wicks can be interpreted in two particular ways. We can either see them as a rejection from a particular price area, so that could be prices come and moved up towards a resistance level. It's tried breaking above it and it's rejected it quite hard, so it's pulled all the way back down and left a long wick. Okay, so that's rejection from a particular price area. We can also look at a candle wick as a potential range for the next candle to move into. So if we've got a green bullish candle moving upwards, if that's left an upper wick, then that means the next candle's actually got room to start moving up with it. Okay, so what we often find is if there's no wick in the direction that we're actually trading, often we find that candles actually reverse from these points. Not always, but a lot of the time, and this is going to be referred to as a fake out. We're going to be coming up to this shortly, so don't worry, we're going to cover that. But for now, let's just take a little bit of a look at an example of what I've just said, okay? So rejections from price area. So here we had a support zone, okay? Now we broke below this support zone, and on the previous video, If you haven't seen that already, that was understanding structure. We talked about highs and lows and how when zones get broken, we'll often go back to retest them before continuing, okay? So here we see price broke below this zone. We can see this is marked up here. It comes all the way up, and this candle here, this moved all the way up here, tapped into this zone and got pulled all the way back down. So what that's basically saying is this tried to go up, failed miserably, left a long wick which is showing rejection, and then it actually closed bearish. So that was a nice rejection from this zone, and as you can see here, this continued to fall. What I would say, keep this in mind as well, is when you're wanting to take a trade, so a sell for example on this sell, these kind of wicks are kind of essential for the price to keep falling, because that means it's collected orders on the way up and then it's come all the way back down, and this is giving you a lot of confidence that this doesn't want to go up. It's pushed all the way back down. Whereas if you see all these candles here, sure, they were closing bearish, but there wasn't anything like pushing hard away from this area, okay? So that's just something to keep in mind when you're looking at the charts. If you see something like this is quite a nice indication that your move's going to occur, okay? So let's move on. Okay, so like we just said about range for the next candle to move into. Now a lot of people will see wicks as only rejection, okay? Now that's something that I think in general people seem to stick by. They seem to think if there's any type of wick, it means it's pushing away from an area and it means it's going to turn all the way around. Often that's not the case. So let's look at this example here. So this is the 4-hour chart, okay? I don't know why that says, okay, target, yeah, so I'm going to talk about that in a second. So this is moving up quite hard. This has got a lot of bullish momentum. Now, what's happened here is this candle's closed, bullish still, remember that, that's always important. However, it's left this upper wick. Now, some guys might say, okay, that's rejected this area quite hard, we could be coming back down. But often what you find, if you zoom into the 1-hour chart, is this has pushed all the way up, come all the way back down, which means we've now created a high. And if we remember from the last video, we said when a high is created and it comes back away from the high, there's a high chance at some point we're going to come up and retest this high, okay? So what you can basically do with these sort of candles is use this as a target. So if you see this on say the 4-hour, you zoom into the 1-hour and say look for when it's come back down, and then remember what I just said previously, we're waiting for candles to form in our direction. So these two candles here actually form bullish. Now you could actually say, okay, if I take an entry here when these candles have formed bullish at a previous little structure level, albeit minor, but it is a structure level, you could maybe target this 4-hour wick, which is often referred to in the Forex scalping industry as a wick fill, okay? So, and that's always more successful when you've got this kind of upwards momentum that's really strong. So I want you to kind of clear your minds and think, take out the usual thought of, okay, we see this large wick here, that means we're coming back down. Consider it as a range, okay? So this has created a nice range for us to come back down and retest this high, okay? So, candles with no wicks, so the opposite of what we've just talked about. If a candle has not got a wick in the direction you're trading, it means there's been no range created for the next one to move into, okay? So let's look here. So these candles moved up. This green bullish candle here closed bullish, of course, but it has hardly any wick to the upside. That often leads to candles, the following candle at least, moving in the opposite direction. So we have two examples here of this. So you see this one moved up bullish, it closed with no upper wick, so there's no upper range or range for the next one to move into, successfully anyway, and this one actually closed bearish on the follow-up, okay? So moving all the way over to the right. Now if we move over to the right, we would have on our charts this marked up as a previous resistance level. So we see these candles have been moving up with nice momentum. It's now reached this 4-hour resistance zone. It closed bullish, yes, but it's closed with absolutely no upper wick, so this one's got no further range for the next one to move into. And look what happens again. The next one closes bearish, and in this instance, it then starts to fall, okay? So that's something you need to keep in mind. So when you're looking at your charts and you're thinking, okay, I want to take a buy, but this bullish candle has got no upper wick, just hold back from entering straight away. Maybe look at the other time frames, look at a smaller time frame and say, okay, let's just wait for a few extra confirmations to occur, because like I said, not always, but a lot of the time these candles with no wicks, either the upside or downside, it means that the following candle often moves in the opposite direction. Okay, so moving on, fake outs. See, fake outs are something that themselves can occur because of these no upper wicks. So what is a fake out? Let's ask that to start with. A fake out is when one candle closes outside of the zone and then the next one closes back inside the zone. So what that's basically telling us is, well, one candle's tried to move all the way out and break above. So let's take this example here. So this green candle's closed above this resistance. It's tried to move out, but then the following one has closed all the way back below the range. Okay, so that's basically said it's gone up, it's failed to break out, and the next one's then closed below. Now, a way to avoid this is you just need to wait for the next candle to form. So if you're taking, so let's say here you wanted to take a buy because you've seen this bullish candle close above this resistance. You would then be waiting for the next candle to form. Let's see if the next one stays above the zone, or let's see if the next couple of candles create a support here. So maybe they come down and create a support to then continue up. But if you just wait, often to avoid a fake out, you will see a candle maybe close back in the zone. So if this happens, you now know that your buy trade is invalidated. Okay. Okay, so something else you will realize when you're looking at fake outs, when this actually happens, so this one moves up and this one closes back below, you'll find that the candles then start to move in the opposite direction. So because it couldn't break up and it failed to do so, it makes more sense now for it to start moving down, because it's tried that direction, failed, so then this look then starts to move to the downside. Okay, so let's take a look at another example for this just to emphasize it. So this is, I believe, a gold chart. Okay, so these candles are moving down, they formed a support here. Okay, this one's then closed below the support, so that's a breakout below the support. So a lot of people would probably take a sell on that, but let's notice a couple of things here. Okay, so this one's closed bearish with no lower wick. So as we previously said, when there's no lower wick, it means there's no range for the next candle to fall into. So the chances of it continuing down is lowered. Okay, and then two, this next candle actually closed back bullish above this support. So if you was looking for sells here and you waited for the next candle to form, your sells would then be invalidated. It means you would have not lost the trade because you've been a little bit more patient, and you know you've saved yourself from taking a loss. Now again, what did I say? So when these fake outs occur, there's a higher chance that the candles will then start to move in the opposite direction. So this broke down below, closed back above, and then it started moving in the opposite direction towards the resistance to the left here. Okay, so hopefully that makes sense. All you need to do with this, I think what my point is, you need to just be a little bit more patient. Instead of jumping in straight into a trade on this bearish breakout candle, just wait a little while. Maybe go down to a lower time frame and say, okay, has this moved up and created a resistance below to give me a little bit more confluence that we're going to continue down? But I don't think when you see candles like this, at least in my experience and my backtesting and my previous trades, trying to take a sell on a candle like this with no lower wick often fails. Okay, so just remember that. So moving on. So let's talk about the highs and lows of candles. So for price to continue moving down, the candle that's currently forming should not exceed the previous high. So like we said about in structure levels, when the highs and lows have got to be, for a downtrend, have got to be moving down altogether, it's the same for candles, because if you want the price, if say for example you want the 1 hour to start moving down, well that 1 hour candle should not go above the high of the previous 1 hour candle. If it does, that kind of would give me a suggestion that okay, a new higher high is formed, so there's a chance that it could continue moving back up. Okay, so that's, you need to remember that. And then the opposite's true for the for the opposite, okay, so if you're moving upwards and you were taking buys, that means that candles should not exceed the lows of the previous candle, because then that means you would have made a lower low, and then that's then transitioning into a potential downtrend. Now, from these two pieces of information, this is how we're going to form basically our stop losses for any entries we take. So if we're going off them rules and we're saying, well, the highs and lows should not be exceeded, it makes sense that we can place our stop loss below or above the previous highs or lows of the previous candles. Okay, so that I know that's a little bit wordy, so what we're going to do is take a look at an example here just to solidify that. Okay, so we're here. I'm sure you'll agree this is moving downwards. Now, if you took an entry on this candle here, okay, I mean, this at this point it's got a lot of downwards momentum. So we're now in a downtrend, and we're agreeing we're taking sells. Now your stop loss needs to be above this candle here, and as long as price keeps staying below this high, this should continue moving down. Okay. So like these are making lower highs and lower lows until we get to this stage. So when we get to this stage, notice what this candle did. This candle closed with very little lower wick. Now, what did I say usually or often happens when we've got a candle with no lower wick? We get a candle move in the opposite direction because there's no range for this next one to move into. So here we got a bullish close. Now, if we're then making... So in the first slide, I think I said we need candles to be closing in our direction. Okay, so all these ones are closing bearish, which is good, and they're making lower highs and lower lows, but then we get this one bullish candle. Now that then invalidates our moves. So in my experience and how I trade and the style I'm teaching you is if you see this move down and then you see a bullish candle like this closing the opposite direction, that's the point when you would exit this trade, okay? So the same thing we can look at here. So when it does start moving back up, look at these. These are making higher lows, higher lows, higher lows, higher lows, and higher highs, okay? All the way up. Until we then get this bearish candle. So now we've got a candle closing the opposite direction, not in the direction that we're trading. So you then exit at this point, okay? So this may be that there's a resistance all the way over to the left here. And this might have been that there's a support over here. Okay, but we can't see that. We're just reading the candles. On this slide, all we're doing is looking at what the candles are telling us, okay? So hopefully that makes sense. Okay, so how do we use the candles? So it seems simple, but if you're looking for sells, you want to wait for bearish candles forming. Okay, so you're not going to take a buy on a green bullish candle, even though maybe that green bullish candle's got a nice big upper wick rejecting. So say if we're taking sells, we don't want any bullish candles to be forming. So what we need to do is sit back, wait, and look for bearish candle closes. Now, that's even more solidified if we have these bearish closes at a previous resistance, okay? So that means we're now respecting the resistance, and the chances of us moving back down so that we can take a sell is much higher. The opposite is true for buys. So if we want buys, we need bullish candles forming, green candles forming in our direction we want to take a trade. And again, if these bullish candles form at a previous support, that's even better. That means your chances of winning this trade are increased so much more. Okay? Now, like I just said before, your stop loss should go above or below the wick of the entry candle. So if you take a buy on a 1 hour bullish candle, your stop loss needs to be below the low of that 1 hour bullish candle, because basically what we can say is as long as price stays above that low, we should continue moving up. If it goes below that low, then that means we've now created a lower low, so our trade is invalidated, okay? And again, if candles close in the opposite direction, once you're in a trade, so if you're in a buy, if you see a candle close red, bearish, you want to close that. And the same is true for if you're taking sells, you want candles to be forming bearish, bearish, bearish. If you see a green bullish one, you need to either consider closing all your profits and taking your money and accepting that. That's absolutely fantastic. You've won a trade. Or you need to be setting it to break even. So that means making your stop loss 0 so that you can't lose any money. All you can do is get out of the trade with 0 loss, which is great. That's I class that as a win. Okay. Now let's take a look at a trade, an example. Okay. So this is an actual trade I took this morning. It was on my Instagram analysis and my story analysis. So be sure to take that out. Check that out. Sorry. But let's have a look here. So on this particular chart, my bias was downtrend. Okay. Because further up here we've got lower highs forming and lower lows. Now we've come back down. We've created this low here. We've then moved back up. And I think this was Asian session here. We ranged a little bit and we created a resistance. Now, when I came to the charts in London session, it was here. Okay. Now these candles came up to this previous resistance. This one closed bullish, but rejected the upside. But because it's bullish, we don't take an entry on that. We always want to wait for candles to close in our direction. So what it was is when this candle closed bearish here, it actually closed below this support. So this was a low point. Now when we close below this support, that means we've now created a lower low. Okay. Now, what did I say about fake outs? Now we can always take an entry on this candle here, okay, with our stop loss above this candle. But the problem with this is, look at the size of the stop loss. That doesn't really make much sense. It's a bit of a big stop loss. If we look down here and say, okay, this target's down here, it's a bit close, okay. So for this particular trade, what I did was I waited, and I waited for the next candles to form. And by this, I also avoided being part of a fake out. So this candle could have broke down, and then the next one could have closed back above, which would have been a fake out, and I'd have took a loss more than likely. Okay. But what I did is I waited for it to break down, come back up, and then it formed this resistance here. So when these candles were bullish, there was no sell, obviously. But then when this one closed bearish, okay, this is when I took an entry with my stop loss above the high of this candle, because I said if price stays below the high of this bearish candle, we should be able to move down to here, okay? Which we did at this point. Now, the problem was with this one is this bullish candle formed. Now, that is a usual reason to close a trade, but this candle's high did not exceed this one, so it didn't make a higher high. So in this particular trade, because of how I trade and how much I've been trading this particular pair, I didn't close it. But the general rule is, if you don't see candles close in your direction, you need to close, okay? And then this was here, a 30-minute support zone. So on the 30-minute, this actually comes all the way down to here, on here, and I actually took this trade down to here, okay? So hopefully that makes sense. Top tips from this presentation. For starts, I'd like to just point out, like I said in the beginning, this is setting you up with a toolkit to succeed and see things that you might not see before, or something you've not considered before. And I just wanted to demonstrate a little bit what you need to look for. Okay? So, top tips. Always wait for candles to close in your direction. Never take a buy on a bearish candle. Never take a sell on a green bullish candle, okay? Because that's stupid. I know sometimes candles look tempting and they look like they're just rejecting to go the other direction, but you need to wait. If you wait over time, because in this game it's a marathon, you see. So your edge needs to play out over a long time. So by waiting and being more patient and taking candles that are forming in your direction, over time you've got a much higher chance of succeeding. So what else? Candle closes at structure levels are more likely to succeed. Okay, that's very simple. If you've marked on a resistance zone on your chart, if you have candles move up to your resistance zone and close bearish, the chances of their following candles moving down and also closing bearish is much higher. Okay. You also need to pay close attention to the highs and the lows of the candles. So make sure each candle is respecting the previous high or the previous low for it to continue in your direction. And you also need to be aware of the overall trend. Are your candles forming in the same direction? So if your structure on your higher time frames is saying we're in an upwards 4-hour trend, for example, like we said in the previous video, if you've not seen that yet, you need to go back and watch that. Are your candles, or is your trade a buy in that same bullish direction? Or is your sell in the same as same direction as the overall downtrend, for example. If you start getting into the habit of doing that, you've got much more chance of succeeding, because the power is in the uptrend. The upper trend will dictate what these smaller time frames are doing. So that's something else to remember. Now, that's pretty much it for this video, but I just want to quickly look at a live chart, see if we can actually spot anything. Okay, so let me pop that up there. So, okay. So so this is the trade I was talking about this morning here. So let's do what we was doing before and mark up some levels. So we've got this low, we've got this high, and then looking to the left, we've got this 4-hour strong support zone. Okay, now let's move down to the 1 hour. So if we're at this strong 4-hour support zone, there's a chance that candles could start forming bullish here, okay, because they might reject this area. But what you need to wait for is, if we're working on the structure levels, we need to wait for this previous high to be broken above for us to consider buys. Okay, so that's what we was teaching in the last video. You need to wait for, okay, so price may reject here, and if it comes up above this level, this previous high, that means we've then created a higher high, so then we can maybe come look for a retest of this zone to continue up. Okay, what else is there? So let's have a look. As for wicks, okay, so let's have a look at this here. So these are the kind of wicks you're going to want to look for. This is a nice indication of rejection from an area, because if you drag this left, you've also see there's quite a lot here. Okay, and then ultimate targets for this particular zone. So if you look at this here, if these are rejecting here, and this one's starting to break the zone, so this has broken this little support here, then you should be targeting maybe down to this zone. Okay, so you would not take a trade on this, you wouldn't take a trade on that, because that's too weak. That's another weak candle. Okay, but then look, and these were also closing like above this level here. Now these created a support and started moving bullish, so again, you're not taking trades on this. However, when this one closed bearish, it also closed bearish below this structure zone, so this little support here, which is a great indication that we're going to start moving down at this point. Okay, so that's I just wanted to show you a little bit of something you could look at, just a little bit of an example of how I look at stuff. But I do hope that this video has been helpful to you all. Thank you so much for watching, like always. Next time's video is going to be confirmed. I haven't made my mind up yet what I want to do it on. I'm thinking either risk management, trade management, a bit of psychology. If you're watching this, be sure to message me on Instagram. I'd actually like a little bit of interaction from you guys this time, to actually tell me what you want to see, what you want me to work on. Because I think between structure and candles and the basic concepts, you've got quite a good toolkit of things you can work with now. So you can start going away and spotting all these things I've talked about in your charts, and starting to look for maybe possible entries. The only thing I feel that's missing is we've not really talked about risk management, and we've not really talked about trade management that much. So they could be two good things to get onto. But like always, be sure to hit my Instagram name up, which is down at the bottom, Trade Ideas. Message me on there, tell me what you think. But overall, I think we're on good track now. We've got some good content going through, so hopefully you guys can start piecing together some nice trading ideas. But until next time, have an absolutely fantastic weekend like always. Thank you so much for watching, and I will speak to you soon. Goodbye.